Sitting here with Rich Lerner. He's with Housing and Healthcare Finance, a major HUD lender. You know, Rich, you've seen a lot of things in your career, but have you ever really seen 2.5% long-term fixed rates before, like we're seeing today?
No. Clearly, I don't think I or anyone my age has.
How has that changed the market for you?
Clearly, it's made it easier to loan money, especially against an asset class like senior housing, which has not really, on the cap rate side, kept pace with lower interest rates, for long-term interest rates.
Yeah, yeah. And you know, you do a lot of HUD business. I mean, aren't borrowers just licking their lips to, you know, kind of get in there at that kind of low rate?
A lot of them are, as long as they're willing to put up with some of the headaches that are involved in the HUD process and HUD. Yes, very much so.
But is that really that much of a headache today, given, you know, a lot of the things have been cleaned up? And
it is a lot less of a headache than it ever was, and a lot less of a headache than people sometimes think. But if you still remember it from 10 years ago, people, if you haven't seen the new HUD, then you don't know how good it is.
They still think about 10 years ago?
Yeah.
Really? Okay.
People, perceptions are very slow to change, especially if you haven't had the experience and get to see that it's different.
Interesting. The HUD queue, let's say a year ago, was quite long, and people started complaining again about that. But that's changed. They've kind of gone through that, from what I understand. From start to finish, how long does it take you to bring someone through for a refinancing of an existing HUD loan?
For refinancing of an existing HUD loan, it's about 4 months, give or take.
Start to finish.
Start to finish. You know, sometimes it's more, it could be up to 6 or 7, but usually it's 4 months, as long as everyone's doing what they need to do. It has more to do with the responsiveness of the underwriters and the borrowers and the third parties than really HUD at this point.
And can't you kind of push some of the third parties along on that?
You can try, but sometimes it's the borrower that's not getting it done that quickly.
Oh, okay. Well then.
And sometimes it's a third party, and occasionally it's HUD.
Right.
But much better than it used to be.
How about for acquisition financing when it's not refinancing an existing HUD loan?
That's 6 months on the inside, and sometimes can go up to 9.
And why does that take longer?
More third-party reports, more of an underwriting on HUD's part.
Because it's a
new loan, they don't have a lot of the old documents.
When you talk to your customers, what's the primary reason, especially in this interest rate environment, that they don't go to HUD? The hassle?
It can be a lot of different reasons. Some of it can be a little of the hassle. Some of it is having to deal with the replacement reserve requirements and getting your cash out and having the systems in place you need to take your money out of replacement reserve to do repairs in the facility. But for the most part, it's that they don't want the long-term loan yet. They believe there's more upside in their facility. They're not sure if they're going to be keeping it for the long term or selling it or repositioning it. So it's more that they want more of a short-term financial structure.
So it has nothing to do with the fact that they think rates are going to even go lower. It's just that they want the flexibility.
Not many people think rates are going much lower.
Yeah, I can imagine.
We don't really see that. It's more flexibility. Interestingly, it might be even easier for people to refinance their existing HUD loans, as HUD's just come out with a program on the multifamily side to do loan modifications where you don't have to do a new Ginnie Mae and you don't have to get a new FHA. Almost the mod program they used to use for defaulted loans or loans that were in trouble, and they're talking about rolling that out to the healthcare side.
Has it worked well so far on the other side?
It's also very new, but yes, it's a quicker process. They're doing that to reduce the tension and reduce the wait for A7s and reduce the stress on HUD staff. So if they don't really need to do that much underwriting, if the loan is staying the same and all they're doing is lowering the interest rate, it makes sense to make a streamlined process.
Right. And what percent of your business is existing or repeat customers coming back?
Probably 70% is repeat customers coming back, but I'd say 90 to 95% is either repeat or referral.
Okay.
We have a very loyal customer base.
And I know your HUD business has been going like this. Do you do anything in the Freddie side or bridge financing?
We do bridge financing.
Okay.
We've seen quite a bit of activity there. We actually have a new program where we can do smaller bridge loans, 5 to 7 million. Totally our underwriting, very quick streamlined process. and we've done some medium-sized mezz loans.
I assume the bridge is, your goal is to bridge to HUD.
Usually we will be bridging to HUD, that is the goal.
Okay. And how's your pipeline for 2013 looking?
Extremely robust.
Very robust?
Very, very nice.
You adding staff, or are you?
We've added quite a bit of staff last year. Right now we have the staffing we need to handle it.
Because you got about triple, is your volume last year about triple what it was 3 years ago?
Yes. Triple what it was 2 years ago, and our pipeline is on course to maybe go up by the same amount this year.
Good, good.
Yeah.
So another good year for 2013?
We hope so.
All right, well, thanks for the update.
Thank you.